Your team spent 4 months this year trying to get a new production process to actually work. Half of what you tried failed before you landed on something. Most business owners write that off as the cost of doing business. Time and money spent, no real return except the finished process. Here's the part most people miss. The government might actually owe you money for that work, whether it succeeded on the first try or not. This happens constantly, especially outside the tech industry. A manufacturer tweaking a production line, a food company reformulating a recipe that keeps failing testing, a construction company trying to solve a technical problem with materials or methods. None of that looks like research in the way most people picture it. Lab coats, university labs, so these business owners categorize it as ordinary operating expense, write it off as a loss when it doesn't work, and never think to ask whether it qualifies for anything. That's an expensive assumption because there's a program built specifically to recover costs from exactly this kind of work. Genuine technical problem solving, whether it succeeded or not. It's called SR&ED, Scientific Research and Experimental Development. It's one of Canada's largest programs supporting businesses that do this kind of work. Here's the important distinction. This is not an upfront grant. You don't apply before the work happens and wait for approval. Instead, you claim tax benefits for R&D work you've already completed, going back up to 18 months. The benefits can include an income tax deduction and an investment tax credit. Last year, the average claim was $198,000, and the program paid out $4.5 billion across almost 23,000 Canadian businesses. Here's where I want to slow down, because this is the part that rules people out incorrectly. You do not need to be a tech company. Manufacturing, food production, construction, any business that genuinely attempted to solve a technical problem, tested something, or tried to improve a process can potentially qualify. This isn't a lump sum check handed to you in advance. It's claimed after the fact through your tax filing as a deduction and potentially an investment tax credit. The average claim last year was $198,000, but that's an average across almost 23,000 businesses, not guaranteed amount for any individual business. Your actual claim depends on your eligible expenses and your specific tax situation. What can actually be claimed? Employee wages for people doing technical work, materials used during testing, prototypes you built along the way, and equipment purchased specifically for R&D work. So if your team spent weeks building and scrapping prototypes, that time and those materials are exactly the kind of thing this program is designed to look at. Because this is claimed after the work is done, timing works differently than a typical grant application. You're not applying in advance and waiting for a yes or no before starting the work. You do the work, then you claim the benefits through your tax filing, generally covering activity from the past 18 months. Here's an illustrative example. Say a small manufacturer spends several months adjusting a production process, testing different configurations, and building a prototype component before landing on something that works reliably. The wages of the employees involved, materials consumed in the testing, and any prototypes or R&D specific equipment purchased along the way could potentially be eligible for expenses under SR&ED. This is an illustrative example only. Whether specific work qualifies and the actual value of any claim depends on the details of the project and current program rules. This is not a guarantee of eligibility or a specific dollar figure. The biggest mistake, assuming this only applies to tech companies and never even checking. Second mistake, treating a failed attempt as disqualifying. A lot of genuine R&D doesn't work on the first try. That doesn't automatically remove it from consideration. Third, not tracking wages, materials, and time properly as the work happens, which makes it much harder to substantiate a claim later. If you're trying to figure out whether your business has anything worth claiming, start by asking, has your team tried to solve a technical problem in the last year and a half, even if it didn't fully succeed? Before you explore this further, gather what you have: timesheets, project notes, receipts for materials, and equipment tied to that work. The stronger your documentation, the easier it is to determine whether a claim is worth pursuing. And ask specifically whether the work involved genuine uncertainty, not just routine maintenance or applying something you already knew how to do, because that distinction matters for eligibility. To sum this up, SR&ED isn't a grant you apply for in advance. It's a way to recover costs after the fact for genuine technical work your business already did, going back up to 18 months. Last year, the average business that claimed it got back $198,000. If your team has spent this year building, testing, or troubleshooting something technical, successful or not, it's worth having a conversation about whether that work could qualify. Reach out to our team and we can help you figure out whether it's worth exploring your business. Eligibility, credit rates, and program rules can change, and any claim is ultimately assessed by the CRA. Confirm current requirements before making a decision based on this information.